Welcome to Creamer Media's Polity. I'm Amy Witherden. With me in the studio is Seeraj Mohamed of the School of Economic and Business Sciences at the University of the Witwatersrand to discuss his column in which he says that the global economic crisis has not bottomed out. Global media has recently been reporting an abatement of the global economic crisis, with news of a rally in US stock markets, and, just last week, the International Monetary Fund's John Lipsky saying that the rate of decline in global output has moderated. Seeraj, what brought about these seemingly positive indicators, and what indicators would be more realistic?
Well, I think that the amount of money that the US government and the US Fed is putting into the system, buying up bad debts, and also we're seeing a huge amount of treasury bills being bought up still by China and other Asian countries. These are causing some response in financial markets, and people are thinking that the liquidity has come back to the markets. I don't think that in the long run that the injections by the US government actually amounts to a recovery. It means that they're able to sustain the banking system as it is now without causing a collapse in the banking system. And if you look at the state of, especially the US banking system, I think it's in a really perilous state. There's still huge write-downs to come about. The IMF, in fact, has upgraded since October 3 times what they think losses in the global financial system will be. Most of those, I think, will be incurred in the US financial system, and it's now, I think, about 3 times what the estimate was in October. And so I'm not very hopeful for a recovery in finance, and that the financial recovery will actually lead to a real sector recovery.
Why do you say in your paper that expectations of developing nations such as China and India leading the world out of recession are misleading?
Well, the huge investments that went into Chinese manufacturing and the services sector and the back office sector in India were premised on huge demand and continuing demand from the US. And we're seeing in China, growth rates have dropped to 6%, which by our standards is very good. But I think to sustain the level of economic activity that China had, 6% is not very good. It also means that we're seeing from 2007, 2008, about 20 million jobs being lost in China. We saw this year Chinese year-on-year exports dropping by about 30%. So while there seem to be activity within those domestic markets, and especially in the larger cities in China, I think the extent of the crisis on those countries and on their, especially the more recently developed capacity to service the developed nations, I think is suffering a huge loss, and it's going to take a long time for that to recover, and it will probably only recover when demand from the developed countries improves.
Why do you describe reports of economic recovery as false hope, and what are the prospects going forward?
Well, there's a sense that the bad times have come to an end now, and that we're actually going to see things getting better, and people are measuring that by performance in the US stock exchange. I mean, the US stock exchange has seen a rally over the past few months that it hasn't seen in 71 years. Bloomberg's today reported that insiders in the Fortune 500 are actually selling like they haven't sold since June 2007. And that big selling rally happened just before Bear Stearns collapsed. So it seems that they're taking advantage of this upturn, and they're selling, taking their profits, and most of them realize that things actually aren't as good as it seems to the market, and that their companies can't sustain this current level of stock prices. So I think just looking for that hope in the financial markets and what stock prices are is incorrect. And then people, I mean, you still hear hugely negative news about the real sector, about the auto industry, about basic engineering, infrastructure development, where I think the US commercial property market is about to collapse. And we're going to see, I think, many more bank closures based on that. This year alone, we've seen 40 US bank closures. The FDIC estimates that they're going to have to pay out, I think, 70 or 80 billion over the next few years just to bail out depositors. So things actually, overall, if you look at the whole picture, things really look like they're going to get worse before they get better.
That was Seeraj Mohamed of the School of Economic and Business Sciences at the University of the Witwatersrand on false hopes of an economic recovery.